with all due respect. Hello friends, we get a lot of questions from our followers about commercial real estate, especially how they can get the financing for it. So to address that, I thought who would be better to answer these questions than my guest, Magesh Chandren. Welcome, Magesh.
Thanks, Jas. Thanks for having me on the show.
No, pleasure. Thanks for taking your time. I know you're a busy guy, and out of your schedule, you're taking this initiative and coming for our viewers to, or the listeners to see it. Thank you. So coming to the point again is how the commercial lending is. I know, but for my viewers, we wanted to explain them that how commercial lending is different from residential. What are the pros and cons? How does the commercial lending works?
With commercial lending, the commercial asset class is very wide. It's very broad. With residential, all you get is just one house.
Correct.
Right?
Yes.
It could be a condo or it could be a single family. At the end of the day, the asset classification is a residential house.
Yes.
Whereas with commercial, as I said, there is multiple asset classes. So there is industrial, there is retail, there is office, there is speculative land development, which you can subdivide.
Right.
There's construction, there is gas stations, there's motels, there's self-storages.
Yes.
So the spectrum,
there's a wide spectrum. But
really wide.
To make it easy, some people have an impression when we say commercial is only about big plazas or buildings. Correct me if I'm wrong, is commercial is going to be, even if we are buying a development land and it is going to be subdivided into even 2 lots and you're constructing homes, is called commercial, correct? Mm-hmm. And it's a beauty of that is it doesn't show on your credit if it is going on a commercial side, rather than having it on the residential side. That's how it works?
That's true. So most of the time when builders or developers try to do a project like you explained,
Yes.
where they buy a land and they try to do a speculative development.
Right.
They put it under a numbered company or under an incorporation because there's lots of tax advantages for someone doing it that way than having to put it in their personal names. And of course, there's other obligations that could be big liabilities as well on you if you do it under your personal names.
Right.
So it's worthwhile to put that under a numbered company or under an incorporation, in which case then it will fall under the commercial category. So and then you can actually approach a commercial mortgage broker like ourselves, and who can actually help you through the process.
So my another question would be how another challenge with the normal person is they go to the bank, they couldn't get the access to the commercial mortgage person, whereas residential people, there are mortgage specialists in the bank, outside the bank also. But when we talk about commercial lending, not many people have. Why it is so hard to approach, or they are not approachable, let me say this way, they are not approachable. Why is it so? How to find the mortgage lender?
So I'll step back a little bit. Maybe I can paraphrase or rephrase your question. First of all, why do you need a commercial mortgage broker, right?
Yes.
When somebody can go to a bank and just to get a mortgage, right? I'll probably give an analogy. So let me ask you a question, Jas. Like, say if you have a client, a prospect of yours, and it's a big prospect, and they give you your address, like, hey Jas, come over to a place, this is our address, and you've never been to their place before. Right. What do you do, Jas? You get into your car, what do you do the first thing?
Oh, I have to make sure that I'm doing my due diligence homework.
No. Just a simple question. Like you probably 90% of the times you put the address in a GPS.
Yes.
And then you start driving.
Okay. Yes. Yeah. Right? From that point of view, yeah.
Yeah. From that point of view, just keep it simple, right?
Yes.
So why do you need a GPS? Because you know the destination. Exactly. Like, why do you need a GPS?
Oh, I need it to guide me through there.
Exactly.
Right? Where I'm going.
Exactly. So the GPS for commercial mortgages is a commercial mortgage broker.
That's a smart answer, well. That's a very smart answer. How you divert it into the navigation system is a smart. Yes.
Basically, you know where to go. You know the destination. You've never been there before, and you want to go there properly guided so that you don't get lost. So
exactly.
Say if you don't put a GPS and you're going in for the first time, most likely there are 2 options. You either get lost, or you go late.
Or you never reach the destination.
Right? You never reach the destination. Yeah, you get
and
lost.
Most of the time it is happening now, coming to the same thing related to that navigation system is most of the time people don't reach the destination because they are not following the right path.
Exactly.
When I get the clients' calls, when they reach out to me saying, Jas, I know you sell commercials, but when we go to the bank, we couldn't get the right answer. It's not out of it's out of a budget. I said, how do you get to that? Because I spoke to the mortgage specialist. I said, unfortunately, those are not the people actually who have the right information. And for some, being surprising also, even in the banks, and you might have you can relate to that also, is those people don't tell that we don't know anything about commercial lending. They will give their advice
That's
without
true.
having too much knowledge about it.
So that's very true. So when you go to walk into a branch, maybe I'll backtrack a little bit here as well. So I was with one of the big banks, 5 banks. I spent some time in commercial lending for almost 6 years. Within the commercial bank itself, there are multiple divisions of commercial lending. So there is one division which will just do CMHC insured loans or multifamily apartments.
Right.
One division will do large commercial loans where the loan exposure is over 20 million. And one division will do anywhere between 5 to 10 million, and then one division which will do anywhere from 1 to 5, and then there is one of the small business division which will do less than $1 million loan, or even less than $500,000 loan, right? So even within a bank itself, the structure is very complex. So when you walk into a branch and ask for a commercial loan, first of all, the client is unable to explain themselves what type of commercial loan they want. So the problem starts right there, and then the reception part of it, where the rep there, the customer service rep there, he or she doesn't have a good idea as to which department to even refer it to within commercial lending.
Yeah, because the information to them also be given so limited, they don't know themselves also. It's not to blame them, but they don't have that much of information.
Exactly.
And then the client get disheartened or kind of lost. Okay, it's not possible because it's overwhelming from them.
Exactly.
So my next question would be like, what are the pros and cons coming rather than going to the bank, coming to a mortgage broker like you? You're a mortgage broker, independent broker.
Yeah.
And you just do commercial. Just for the viewers, Magesh doesn't do residential. His only expertise is commercials. He purely do commercials only. So yeah. So what are the pros and cons if somebody wants to skip the bank part rather than doing themselves, to you?
Continuing on the same line which I was talking about, where it takes a long time, or even for the receptionist or the customer service representative to understand it. So there's a time lag between the time that it takes for someone to be identified within a bank to be introduced to the client, where you are the client to the bank. So that could take sometimes a week, or even sometimes more than a week.
Yes.
Whereas if you come to a broker directly, a commercial broker directly, we exactly know which kind of a lender is interested in your product.
Yeah.
So you eliminate that delay of a week, or sometimes even more than a week, right away. By the time someone is introduced by the bank to you, if you come to a mortgage broker, you probably have a discussion sheet in a day or two.
Yes.
From the time you actually contact a commercial mortgage broker. So there is a lot of headache or a lot of stress which is actually taken away when you come to a commercial mortgage broker, because, and of course you have to come to a good commercial mortgage broker who knows what he does, or what he
100%. Yeah, that has to be, and
right?
that I can vouch for him is, and he's not paying me for this, but Magesh helps me 90% of my commercial deals. If not 100, he has helped me. When I started commercial, it was just a coincidence. We met at Cactus Club somewhere, if you remember it likely.
It's almost been 4 years now,
4 years from now, and majority of my commercial deals are going to Magesh, and never I got disappointed with that. As definitely he knows what he's doing on it. But now let me come back to being a devil's advocate. I say, okay, Magesh, great, yes. If I go to you, my process is going to be less. It's going to be hassle-free or less hassle rather than going to the bank. One, but then there's a fee attached to the commercial lending side as a mortgage broker compared to residential side. There's mortgage brokers. Majority of the mortgage brokers don't charge it, whereas commercial. So how you justify that? What your fee going to be on it? The people should pay for it. Is it just the connection, or the way to present the file? Is that what it is for, or why they should pay you?
So as I said, time is money. So when you've lost already 1 week with the bank.
Yes.
So when I get something like that, as I said, time is money. It's so much valuable for yourself to make a critical decision as to whether you want to remove the subjects, or whether you want to even put an offer on a property like that, right? So with the current market being so crazy, every week the prices go up, right? So to your point on the fees, I should say on the commercial side with commercial mortgage brokers, we don't get paid by the lenders. True. On the residential side, residential brokers actually get paid by the lenders.
No, that's why I wanted to bring it, because viewers, sometimes they think, you guys are getting paid from the bank as well as from us. So why is it twice you charging the fee? Whereas it's true, as you said, most of them I don't think so. Any mortgage broker get paid by the lender, and even in the lender side, if they go directly, there is a fee involved in that too.
That's right. I mean, typically in Canadian commercial lending, lenders always charge a fee. And that fee is just to the lender, so they don't share that with the broker. So that is pretty standard across.
Yeah.
So I think those are some value adds, and also it's also the relationships that we have with the banks.
True. Yes.
We don't talk to newbies in the bank, so that could be. So the other thing is that in commercial banking, it's a revolving door and it's a revolving chair as well. So an account manager could be in his or her seat just for a year or two, or sometimes even for 6 months. So their portfolio, they keep changing their portfolio. They move on or progress to the next roles, right? So it's not always. So when you go to the bank, even the banks, if you walk into a branch, even the branch manager doesn't know who the current account manager is, right?
Yes.
Whereas
I've faced that many times. Yeah. For my clients.
So basically, we actually talk to the senior bankers who have been in their chairs for a long time and who know what they're doing, right?
Exactly.
So we directly talk to them, and because we do a lot of volume with these institutions, we sometimes have the leverage to get the best pricing. So if you had to go all by yourself and ask for a mortgage to be done, the lender fees, say for example, would be 50 basis points, which is half a point, half a percent. Whereas we can negotiate that it could be half the fee, right?
Yeah.
So because we do a lot of volume, they kind of honor when we go and present a deal. They honor us as well, and we can get a better pricing both on the application fee, which is the lender fee, as well as on the rate as well. We can negotiate the rates as well because we know what the other banks are offering, what in terms of the lender fees.
It saves the time. It saves the time. It saves the hassle. And I can say also, if somebody wants it to be a sophisticated investor or seasonal investor wants to go time and again, he should not worry about the fee because you're giving the value to them. And moreover, when they want to buy the next property, the third property, you already know their portfolio, how much. Like I shoot a text message to Magesh numbers of time, okay, this is our past client, can he buy this or he cannot buy it? And Magesh can quickly tell because he has that already, the portfolio of that client. So you can know back of your hand whether this client can have it. Other than if I'm keep hopping as a client, if I'm keep hopping to different banks, one, I'm wasting my time, and 9 out of 10 times I won't able to get a lending also because I don't know how to prepare that application. What should I say to the mortgage or the lender? I'm just presenting it, this is the contract, and that's what it is, says that that's not how the commercial real estate works. There's so many things are behind the scenes involved in it. So I would say, guys, it's worth giving the fee. It's not much. Usually it's about, I can say it about 1% something is the lending average fee.
Typically it's a 1% fee depending on the complexity of the file. Sometimes it's higher, but on an average you're looking at a 1% fee. And if the loan volume is much larger, say over 5 million, over 10 million, then the fee could be negotiable less than 1%. But again, it varies.
Yes, there's no set, as same thing for realtors, there's no set, same thing for the mortgage broker, there's no set fee. But at the trend of the market norms are pretty much is 1% of the fee they charge it. So now come to the next question. I hope this helps people why they should go to the mortgage broker rather than going to the bank. Now comes to the people who already know what's the benefit of a mortgage broker is, but they don't know about how the commercial mortgage can benefit to their company and how they can grow their business. What's the difference between owner operating buying than me buying an investment property, right? As an owner operating, there are so many people who don't know if you can put some light on that, that's so much leverage they can take it. So what are the benefits being an owner operator and buying a commercial? Right?
So with owner occupied premises, it could be, say, someone like Jas yourself. You're a realtor and you have a realtor's office which you own. Instead of, it's just renting versus buying. But when you buy under commercial and when you have a good business, very likely that most of the time we can get you 100% financing, which means that you don't have to put anything into
and that surprised a lot of people. They say, is it true, is it legal, are we going to a private lender? I tell them, no, this is legit. I have this, my own office, I have it is 100% financed.
But bear in mind, there is a clause there, like there's a condition. I mean, I have to look at your income of your business.
Your income, your financials has to be strong,
and your balance sheet as well. So I mean, in commercial lending, we look for income statement or the financial statements, which is the income statement and the balance sheet.
Your balance sheets.
It's very comparable to on the residential side where they ask for your personal income documents to verify the income. On the commercial side, we look for your business financial statements.
And another thing is, I love that the best part of the commercial side is it never shows on your credit history. You can still buy houses on your personal net worth. You've wanted to grow on that side. Commercial is completely different, which is the benefit of it. You're getting a 100% financing, people think, oh, it's not true. How is it possible? Depending, yes, as Magesh said, definitely your more financials has to be making sense. But it's not, you have to make millions of dollars to get 100% financing, right?
So basically, when I say 100% financing, sometimes it's even 110% financing, because when you buy a shell unit and you want to do some tenant improvements as well, we can help with that tenant improvements as well to finance
them. To make it more easy, and let's go to the bottom of it. So let's say I'm a small business owner. I'm running a business, let's say mortgage broker or a realtor. Let's say a realtor. There's realtors out there too. They're making good money. Their financials are good.
Yeah.
How I can get 100% financing? Is it my business compared to? I heard doctors are more sophisticated professional. The banks are looking into that. They say it's a safe game for them. Doctors are never going to be out of the business, whereas realtors, if the market goes down. So banks still consider us as being a contender of 100% financing?
See, for 100% financing for non-professionals, you have to have some level of track record.
Sorry, non-professionals, you means like
not being doctors or engineers or accountants.
Okay, got you.
So these guys are professionals. So banks usually like them because
for obvious reasons.
For obvious reasons, and then level of income that they have. So for them, even using some projections for doctors, for example, when they're starting a new clinic, this is for probably I can prospect here as well. Some of the new dentists who are planning to start a new clinic or acquire a new clinic.
And he has helped for a lot of my dentist clients and the doctors. So
so I can use the projections basically
for the dentists. I know the leverage they can get it.
Exactly, and I've helped general physicians as well, general practitioners as well, family clinics where they're buying a building and they're starting out. They've been associates with a clinic for a while, and they want to actually have something of their own. All I ask is for their personal documents, the tax documents, and I ask for projections for their new clinic, and I could get them 100%. Depending on what they show, I can go to as much as 100% financing. Both on if they're buying a commercial property, I could get 100% financing on that. Or if they're buying another practice or another clinic, I can actually get 100% financing on that.
No, which is great information. And especially when you touch about the doctors, I can, without taking a names, it's a common client, and I will tell you about after the podcast that who the client is. They went to Scotia Bank to get the financing. He's a doctor. We sold the building to them, if you can recall that client. He calls me a couple of days ago, and this is very important for the people who are listening to it. Professionals are so busy in their own profession, they don't have a time to look into those fine print or how the banking side works. Just to save the money of a lender, they said, I called my bank guy, and she said 100% done, we will get you 100% financing. So I'm saving the money. Now he calls me back after almost 6 months saying, yes, I didn't know they have got my GSA signed, like corporate guaranteed. So they tied up the corporate with it. Whereas if they have worked with a mortgage broker would have told them, guys, you are signing your corporate guarantee, means it is going to be a liability on your corporation. And then you pick up a choice. Do you want to go 100% or you want to put some money down so that your company is not tied up, because that was his investment property. And he cannot now leverage on his own business as an owner operating, because he didn't understand that time, and now he's saying, I'm going back to the bank and fighting with them to get me out of the GSA. I said, good luck to you. I don't think so that's going to be happening. They will let you go. Right? So that's another thing is with the mortgage broker. See,
that's a good point. You may, the way you structure a deal, sometimes lenders actually lock you in.
And they purposely wanted it because it's the business. Like banks, people, guys, I'm not against with any bankers, but banks are not saint. Okay, just to give you an example, people think we are going to the bank, everything is going to be, they are always going to be working for us, which is not true.
No, it's not all the lenders. Some lenders actually kind of, your hands are tied depending on how the deal is structured.
They're doing business. They wanted to tie it up, and that's what they did it with that doctor, because he's so busy in his profession. All he thought, I'm saving 1% fee, 100% financing, Magesh was providing me, this guy's bank is providing me, I'm smart, I saved it. Now he felt, oh shit, I didn't know they got my GSA signed, they have a first priority on it. So he cannot go to any other bank now. He's stuck with those banks. So make sure when you're signing those papers, have a person, a professional like Magesh on your side, a good realtor on your side, who can explain you everything, guys, this is what you're getting into it before you do it. Because there's a lot of money involved.
Very true. Very true. And continuing on that conversation between professionals and non-professionals, With non-professionals, with professionals, I need projections. With non-professionals, I need at least 2 years of financial history statements for me to look at it and then present it to a lender so that I can go up to 100% financing. I'm not saying that I can always get 100% financing. I can go up to 100% financing depending on the financial status. So that's the difference between professionals.
Being working with Magesh, he's always being very conservative. He doesn't say it, but he most of the time he has pull it off 100%. So I can say for him that yes, he knows what he's doing in it.
It's more like under promise over deliver. You don't want to
that's what I do it in my business too. I always try to under promise it rather than say too big things and then can't able to deliver it, right? You don't want to set up the expectations there. But definitely, that's another thing is you should go with a mortgage broker rather than just going to the bank. Again, I'm saying it, I know I keep saying it, guys. Magesh is not going to give me on the side some commission of it. I just wanted to, for the viewers to help understand this is good for overall. If you look at it, it's worth paying the fee and get your mortgage done rather than not able to get it done, or you get it some later on something which is not you were expecting it. So this is one is we touch base on owner occupied, which is means
one more thing, Jas, just sorry to interrupt. So on the owner occupied mortgages, aside from the mortgages, we can also do lines of credit for operating businesses, which most of the times the operating businesses will need. So like lines of credit would be unmargined lines of credit, which is there's just like a revolving line of credit when I say unmargined. And for bigger businesses which have accounts receivable, there's something called a margined line of credit. Usually the lenders look at the receivables and typically they net out the 90-day receivable. They just take anything less than 90 days and give you 75% of that. So if your receivables were $1 million, typically I can go up to $750,000 minus any of your priority payables or short-term account payables.
To make it understand easy for some of them is they may not be able to understand the accounting language in it. Receivables means the money you which will be getting it. If you're doing a sales of $1 million, right, you can get them $750,000 condition to whatever you have to pay to the other trade people, or you buying the goods if you have to pay it to the people from where you buy the goods. But receivables is the goods has already been sold to somebody and that money is coming in. So that's a big advantage for the people who are running the small businesses, because that operating line of credit can help you to pay day-to-day expenses. It's a big leverage, guys. That is really good. And he has helped a bunch of my clients also on that, and I know how it works, which is a good tool. Yes.
Especially, given
there's so many things in the commercial people don't know.
Yeah.
And they try to hustle around. Okay, how we can do it? Like I met a client 2 days ago. He has a building in Surrey. He has a mortgage of only probably $100,000 on it, and that building worth today is $3 million. I said, why don't you get refinance? He said, will they get me refinance? Because my income, they always get confused with their personal income. They said, oh, just my personal income is not. I said, nothing to do with your personal income.
Yeah,
I know your business is good. Go to the bank. Yeah, you talk to the bank, give you the 100. If not 100%, at least 80%, 75% loan to value. Yeah. You can pull out that money and buy something and leverage.
Exactly. Leverage.
They said, oh, is it true? Can we get this done? And he was so happy when I explained him how it can be done, right?
You could have a $20,000 in personal taxes filed every year, but you're having all your income in the company.
Yeah,
company's income is what commercial lenders look for.
And people don't know, but understand it. That's why I take this initiative. Let's educate the people, because there's so many people out there which wanted that, right?
Yeah.
So Magesh, now we have already touched on owner occupied, or people who are running their own business and using the premises called owner occupied. What about as an investor? I have some money. I wanted to buy a commercial plaza or a commercial building. How does that side of a mortgage works on that side? If you could put some light on that part.
Yeah. So that is a commercial investment property,
correct,
right?
Yes,
it could be an industrial property, or it could be a multifamily apartment building, or it could be an office. Like call it whatever is, you're going to rent it out and get some income on that.
So let's say, example, I wanted to buy a strip mall. There's about 10 units in there, retail units. All the units are being leased, 100%. Cap rate is between, let's say if it is Surrey, 4% cap rate. We will be very lucky if you get 4% in Surrey. But for an argument's sake, let's take an example, 5% cap rate.
Say typically, regardless of the cap rate, I can go up to 75% financing. When I say up to 75% financing, it is limited by how much of net operating income the property makes, how much after paying your operating expenses,
right?
How much does it make? So there's something called a concept of cap rate, which you probably know. Cap rate is basically your return on your investment. So any asset class that yields, say in today's market, say a 5.5% cap rate, I can definitely get a 75% loan to value.
And just to make, sorry I'm interrupting you. So when you say 75% loan to value, does it also going to be anything to be related to my company's financials or my personal income, or just basis on that?
No, just based on the property alone.
Property. So nothing is attached, whether I'm making $1 million or whether I'm making $100,000 or $10,000 annually, it doesn't matter, guys. As long as that property has a good rental income, we can get a 75% loan to value, right?
Yeah, of course. I mean, your down payment will be verified, but I can get you 75%.
So on average, let's take a real picture now. On average in Surrey, now the cap rate is about 3.5 to 4. 4 would be the highest side. It used to be 5, but off late it's been close to 3.5. So we'll be able to get it with 3.5% cap rate, also 75% loan to value.
No, as the cap rates keep lowering.
Yes.
Say 5.5. I said I can give you 75. 4.75% cap, I could get you 65.
Right.
Say a 4% cap, you're probably looking at 45 to 50%.
50% of the loan, and the 50% have to be. That's a good point, because I get calls. People say that I find this property, and when I ask them, do you have your mortgage in place? Yeah, I went to the bank and they said, 75% loan to value, will do it, and 25. I said, no, that's not on this cap rate.
Yeah.
So the bigger the cap rate, the better leverage you will get it, because banks are going to see whether that building itself can hold the whole mortgage on it on the basis of the rental income coming on it, right?
Yeah.
So if somebody wants it, so seems like in this lower main market, it's next to impossible to find something for cap. So we have to go out of it, out of the places. Like we just did it one in Vernon, we did it. So that's a good place to go. Like Okanagan, they're still being above 5%.
Yeah.
So
that's it. There are some instances where you have an operating business, you have good income, and you want to buy this investment property as well. So say if the cap rate is 4%, I'm able to get you 50% loan to value. And if there is enough income on the operating business, then I can typically, maybe I can go to 75% or even higher, depending on how much you can actually show on your operating business.
So make it another way is, for the viewers again to understand is, if I find a property in Surrey where the cap rate is only 3.5%, but I don't have a capacity to close it with 50%, I can put my corporate guarantee into it. Operating income means my company, if my debt can serve the debt ratio, correct?
Yeah.
And that is, with that way you can leverage it maximum, then you can leverage it, 75, 80, 90, depends on how is your operating companies, right? If you purely wanted to buy, not with your financials, nothing corporate guarantees, you don't want your company to be tied up with that property, then then it's going to be purely basis on your cap rate. But if you wanted to tie it up together, then that's the best way to go. If you don't have that much money in Fraser Valley area, you wanted to buy a commercial, go along with your corporate guarantee in it. That way you can get the leverage on it, right?
Yeah. And again, that is for the industrial or the office properties or the other asset classes. But with multifamily, it's completely different. It's a different ball game, multifamily, because now you also have CMHC in the picture.
Yeah, CMHC in there. Right? And I read your post in there on Facebook or somewhere. You posted it. CMHC has cleared your file in 6 weeks or
in 1 week, basically.
1 week. It used to be 6 to 8 weeks. I remember.
No, it used to be 5 to 6 months.
Yes. Yeah. I remember you used to tell me, Jas, whenever you're going for a CMHC mortgage, like the multifamily means the condo building, if you're buying it, put up a subjects for 2 months at least, if we wanted a short commitment on it. And I was saying it's next to impossible. So it's a good news. So is it just out of one file they have done it, or this is the practice now?
No, I've seen from other mortgage brokers as well who have commented the same thing, that they have streamlined. It looks like they've streamlined the process.
Really good. No, that's a good news.
So, but again, your application has to be complete. So ensure that you work with a proper commercial mortgage broker who knows what they're doing and who has the proper lender status with CMHC. So not all mortgage brokers can submit a CMHC application.
I thought anybody can do it. So not all the mortgage lenders can.
Typically what mortgage brokers do is they approach another mortgage broker.
But why is it the CMHC has their designated
Yeah, basically,
mortgage brokers?
they want to see a proper application. So a mortgage broker is vetted by CMHC before you can submit an application.
Okay.
Because our
Are you one of them?
Yeah, I'm one of them. So I've done a number of CMHC applications, and as such, I was vetted by CMHC to be a lender correspondent with one of the bigger lenders. So as such, I underwrite the file. It's not any other analyst who's underwriting the file. I accept the application. I put together a complete package, and I submit directly to CMHC. It's not to like any other bank or anything like that. I submit to CMHC, and CMHC issues a certificate of insurance to our company, and then we assign it to a bank or a life company and get the mortgage.
No, great, man. Looks like there's a lot of information about the mortgage side. I thought we can wrap it up in one podcast. Probably I have to invite you one more time to see it, because we already probably 40-50 minutes been already there. So let's wrap it up. Anything, Magesh, before we wrap up, anything you want to say to our viewers, or you want to share your information also if somebody wants to contact you?
No, you have my information.
Yes, I will tag you in there.
You tag me in there.
Yes.
But us as a commercial mortgage broker, you can see the responsiveness. We don't actually, when we get an inquiry, we try to get back to you within the same day. Worst case, maybe a 24 hours next day. But we'll ensure that your request is taken care of in a timely fashion, and we try to give you the best of the customer service.
Yeah. No, nice, man. Well, that's a wrap. Big thanks to Magesh for coming and taking your time.
Thank you.
Thank you to all the viewers who are listening. Thank you very much. And before we leave, if you are interested in learning more about real estate and real estate investing, consider joining a VIP club or newsletter. All the important links will be in the description. You guys have a wonderful day. Take care.